Dan, great to see you.
Great to see you too, Wilfred. It's been since 2022 when you left.
I know, it's been a while. There's been quite a roller coaster ride in markets since then. But let's talk about the here and now. We're going to broaden it out in a moment, Dan. But what is your take on the market reaction to this news overnight? When you see Nvidia down 7%, were you expecting a worse reaction, a better reaction? What's your takeaway?
Well, I mean, obviously, people are trying to spin this as bullishly as they can by saying, well, you know, it de-risks China, and so maybe the bar is getting reset. The first thing that crossed my mind was, okay, so you're trying to sell a Ferrari whose top speed is 90 miles an hour, not 200. Well, you have to write that down to zero? You can find any other takers for this, when supposedly the bull case is demand is far outstripping supply, and you can sell, you know, supply is the limiting issue. So that's the first thing that struck me is, why are they taking a $5.5 billion write down? So, but again, we've had a lot of data points on the other side, such as Microsoft, you know, walking away from data center leases, power contracts, et cetera, and the innovations by DeepSeek, which cuts costs to produce tokens by over 90% that are now being used in US models like Meta. And you go, okay, you know, I've been saying for a while there's an AI digestion phase coming this year, and there's probably some signs that it's actually here, that they can't resell these chips anywhere else in the world, despite supposedly demand being so amazing.
So is this a small incremental data point to that thesis, or are you kind of wanting to make sure you're a long way from the, I guess on the surface, potentially overvalued sector that Nvidia kind of represents?
Well, here's the thing. Nvidia is actually not overvalued. The problem is you don't know how low the numbers are likely to go. Because coming into today, people were thinking revenues are going to grow. The street had modeled, because Nvidia doesn't guide more than a quarter out, the street had modeled every quarter this year, revenues growing 10 to 11% sequentially. The thing is, if you go and look at the guidance that all of the customers gave when they reported the December quarter, you've got CapEx growing, AI CapEx growing at about mid-single digits versus growing in the mid-teens sequentially all of last year. So there was already this mismatch. You knew guys were buying in front of demand to try to get in front of export tariffs, trying to get in front of sanctions, et cetera. And you can just see that from the China export data already, where for China as a whole in the month of March, exports were up 12.4%. People were expecting 4.6. So that's a massive beat there. And so you can already tell demand's being pulled forward. So my thought was there was a payback period coming anyway. And this in some ways helps to hide that, because you can say, well, this is all related to Trump, and so we're going to take this right down. And so if you want to believe end demand's good, you can't.
Dan, before even this tariff craziness at the start of the year, I know your top pick was cash. I want to come to that in a moment, and that you didn't have a single Mag 7 in your top picks for the year. Let's broaden out from Nvidia to those Mag 7 names. On this big pullback that we've had, not just in the last couple of weeks, but since the start of the year, have you changed your mind and bought any of the Mag 7 as they pulled back?
We're always trading stuff for bounces, and obviously based on some of the things I've written, we expected a bounce last week, and we got that. But from a structural basis, the estimates for all of the Mag 7, now, and don't forget, Wilfred, when the Mag 7 reported the December quarter or calendar Q4, 6 of the 7 had their March revenue estimates already get cut. So think about that for a second. So numbers were already going down. And by the way, you can go back to the middle of last year, and Microsoft, Amazon, and Google all had their September quarters cut after they reported the June quarter for revenues. So this has been going on for a while, but the thing is, when the Fed's cutting, like it was last year, nobody cares, right? If the stocks are going up, the charts look good. Why worry about fundamentals or valuations? Because the stocks are going higher. So looking forward, I expect all the estimates to come down yet again for the June quarter when these companies report the March quarter. They were already having troubles when they reported the December quarter before all this tariff stuff kicked in. And the one thing I've learned doing this job is that stocks always seem to go lower than I ever imagined humanly possible. And likewise, like in 2021 with the meme stock craze, they always seem to go higher than I ever imagined possible. So I don't try to get in front of cuts to estimates, especially when the sentiment has now started to turn to some degree. And valuations, which we haven't talked about, are still very high.